Okay, great. Just a quick one, guys. This presentation is provided solely as a courtesy to aid the education of our customers and prospective customers. It will discuss risk management concepts, strategies, and does not include the recommendation or endorsement of any particular security, chart pattern, or investment strategy by Forex.com. This presentation is provided without regard to the specific investment objectives, financial situation, and needs of any particular recipient, and we don't guarantee or verify the accuracy of the information or commentary provided. It will include references to actual past trading results for discussion purposes, and past results are not necessarily indicative of future results. Futures, options on futures, foreign exchange and other leveraged products involve substantial risk of loss and are not suitable for all investors. Spot gold and silver contracts, they're not subject to regulation under the US Commodities Exchange Act, and contracts for difference or CFDs, they're not available for US residents because of regulatory reasons. Oh, one moment. Let me just see what I've done here. Oh, if someone at FX Street could just tell me how I can hopefully get off the annotation tools. Let me just see if I can just, okay, cool. That seems right. Sorry, my fault. Everyone, just bear with me one moment. Here we go. To get us started then, guys, let's start with the pound, because we've just had some really big moves in the pound. I don't know if any of you have been trading it. Take a look at an hourly. You really get to see it. Very sharp drop. That comes on the back of weaker than expected inflation data for October. It fell to 2.2%, which is one of the lowest levels in a good couple of years, actually. Added to that, we also saw, no upward contributions in inflation. Now, as you can see here, just pointing out, we fell below 150. We fell to a low of 158.55, but we were looking extremely oversold on the hourly RSI. Hence why I've just started to gather some track back. Now, I've just posted something on our website. Just bear with me and I'll give it to you. Hang on. Because I think it's interesting for you guys, because obviously tomorrow we've got this inflation report out from the UK. So we believe that downside in cable could actually be limited, or potentially could be limited, because we are expecting some upward revisions to growth, downward revisions to the unemployment rate, which may then be used, or may then help boost interest rate expectations, which of course could boost the pound. So what we may see is just any downside being faded by the market. As I mentioned, that 158.50 level is huge, very, very important level, and now is acting as very, very good support. We do think in the lead up to this Bank of England inflation report, we could actually see, what we may see is just a bit of a tight range persist between 158.50 on the upside, 159.50, 158.50 on the downside, 159.50 on the upside. That break below 158.95, which we really cut through like butter, was quite a short-term bearish development. But as I said, short-term, yes, we're looking quite weak at the moment, but we do seem to be basing, and we may just see a bit of fading of this down move as we lead up to that inflation report, because there is an awful lot of expectation that there'll be good news or bullish news coming out of the Bank of England tomorrow. So that's certainly what we're watching for right now. Just bear with me one moment, guys. I'll show you as well the daily chart. As you can see there, we're through the 50-day moving average, which came in at just below 160 at 159.80. Fell through that really, really quickly today. We were drifting lower all the way through to this report. So, the market was bracing themselves for bad news. After that whipsaw swing down, we are gathering pace, actually. We're currently trading 158.80. We have made a low of 158.55. The other thing as well to point out today, guys, let's just take a quick look at Euro, because I just want to show you this overall. This is the daily chart, and we're currently very close to testing that 100-day moving average. And I'll bring up my other chart as well. Yeah, it's the 100-day moving average, which comes in at 133.50. We're currently at 133.80. 133.50 is the level to watch. Now, yesterday, I pointed out that the dollar index, let me just, was taking a breather, really, because what we saw was, obviously after the big move higher on Friday, post that amazing payrolls number, we were getting a little bit stuck at this 100-day moving average. But there were actually a couple of reasons for that. Number one, obviously, there was news that there was some split at the ECB. That was helping from a fundamental perspective. The other reason for that was that we saw, the bond market was closed yesterday for Veterans Day. So let's just take a quick look at Treasury yields. Obviously, Treasury yields, they had a big push higher on Friday, got all the way to 2.7%. Oh, that's not going to work. Sorry. And today, as you can see, we're extending gains. 2.8%. So we're extending gains again today, and that's good news. That's supporting that dollar index move. So yesterday, some of you were lucky, picked up maybe that dollar on dips. We are seeing extended gains, and I think if we get a daily close above this 50-day moving average, which comes in at around about 81.35, that is a bullish development, which opens the way then to this 200-day moving average, which comes here at 81.80. As you can see, an important level. It goes all the way back to September. If you cast your minds back in September, if you look at that big candlestick here, that was post the FOMC meeting whereby they didn't taper. So what we are moving into, why this is significant, is that we're moving back into an environment whereby tapering is being priced back into the dollar and it's helping to boost the dollar. That does put a lot of pressure on economic data coming out. Now, this week, there isn't too much economic data coming out of the US. The focus is very much on Europe, where we get the Q3 GDP on Thursday. We also get, obviously, as I mentioned, the UK is having a huge week. So all of that is very, very significant. So Black Cat, you say that euro is still trading within the range. I mean, that is true. Let's just go back to that euro chart. I like the dollar index because it's testing this big level. And as you said, euro is trading within a range. It absolutely is. The downside is capped at that 133 level, 350 level. But obviously, if we get below there, that's your breakout. So that's kind of the level to watch. Obviously, there is a risk that maybe Italy's growth was weaker than expected, which could hurt GDP. But we do expect GDP to be just about in positive territory, but nowhere near enough for the ECB, for the market to change its mind or shift its stance that the ECB is going to be dovish for some time. It does look like that 135 level is massive resistance there. We're still fairly neutral to bearish actually on euro, but it is natural for it to kind of skirt around a little bit after such a big move on Friday. Now, Pan, you've mentioned gold. Guys, I just want to mention as well, I'm going to have to leave at 20 past 10 today because I've got to run off to another appointment. But I'm happy to take questions up until then. As you can see with gold, obviously the problem for gold is the Fed, basically. The Fed, it looks like tapering is back on the card, certainly for December. Be interesting to see with the Federal Reserve. Obviously, they're going to be pragmatic, of course, but they're not necessarily going to want to freak out the market or worry the market anytime soon, and that is largely because of that they did that in September and they were criticised for it. So if they do see the market pricing in tapering, which they are, as I pointed out already, then what we could see is further downward pressure on gold. Now, as you can see, this 12, we're not back at those lows from mid-October yet. They come in around about kind of 1250. And then below there, of course, we're at those June levels where we've got sub 12,100. Is the euro done with its bullish move, or is the sell-off just technical? I think it's going to depend on the dollar. As I said, if we continue to see the dollar extend gains, particularly above that 200-day moving average in the dollar index at 81.80, then no, there could be further downside. Remember, we're still fairly strong in euro. We're still, there's certainly room for more downside there. Sharon, you believe euro dollar is being manipulated on which side? I think that's kind of interesting. You're looking at the weekly chart in euro. Okay, let's take a quick look. One question at a time, guys. Sorry, I'm trying to balance all your needs. Let's look at the weekly. This was a daily that I looked at. As you can see, yeah, I mean, again, there's key support coming in. This 133.15, 133.50 to 15. That is significant. But as you can see here, I mean, we're only back at those lows from September. So, there is further room for downside, but I think it will all depend on the Fed, on tapering. There are expectations that, the Fed could, even if they taper, they could take other dovish action to try and limit upside. So there's a lot going on, I would argue, an awful lot going on. And what we may see is, what we could see is certainly just ahead of some major data, ahead of some major meetings, just a little bit of sideways action. We've already had a very big move already, and there are expectations. You can probably just see it just popped up there from the Capital Economics of expectations of further bearish moves. It will also be dependent on what the dollar does and what the Fed says from there. So we are, as I said, could we have seen the downside? I don't know. I think we're taking a breather right now. That's what the market says. We had a big, massive move to the downside. We are now kind of moving sideways a little bit. But that's normal after such a big move. Aussie, let's take a look at Aussie. Why is it so weak? Largely because the RBA was very dovish. They pointed to the potential for further rate cuts. We also saw some tightening in credit conditions in China. That's also weighing on the Aussie, hence why we saw another decline today. Opens the way to this 100-day moving average at 92.67. Obviously, this move higher here from August to September was on the back of stronger Chinese data and the prospect that the RBA may be done with its tightening, with its easing cycle. Well, now it's not, so we're getting some of that priced out. Also, don't forget, my view with the FX market often is that it takes one thing at a time. Okay, so right now the theme of the moment is Fed tapering again. It's back on. Fed tapering. It's US jobs. They were so strong. Let's keep looking at the data. So when I said at the beginning that the US data-wise is on the back burner, that is true. But do look at two important things, guys. On Thursday, we get initial jobless claims. They're going to be worth watching for sure. We also get Empire Manufacturing, which is one of the early indicators for November. Look at the employment component of that, because we need that to remain strong to see further kind of gains in payrolls. But right now, certainly an interesting time for the markets. Now, Chad, you want to look at CAD. Let's take a quick look at CAD. Just bear with me one moment. Just pull up my other chart as well. Sorry, it's just taking a little while to come out. Just bear with me one moment. Sorry. As you can see with the CAD, I mean, it's weak, right? It's looking weak. It's getting stuck at that 105 level, and that's a massive level of option expiries, apparently. So there could be some defending of that level. But above here, we do get to these August highs, which come in just below 106. But we're getting back to that territory whereby we're looking fairly strong. But as I said, this is much more now a dollar move. Whereas in the past, it's all been about a CAD move, then we move sideways, and we've broken out of that range, and now it looks like we may just make another run at this 106 to 106.70 levels. So it is looking fairly strong. Sorry, let me just get the other one. Sorry, my other chart is just taking a little while to come up. Just bear with me. Okay, so as you can see here, yeah, I mean, looking fairly strong. Let me just get the other one. Sorry. Looking fairly strong. We're not quite in overbought territory yet either on a daily chart. On an hourly, though, let's look at it from a more, as I said, that 105 level is acting as very good resistance in the short term. But obviously, any move back to that kind of 104.80, maybe even 104.70, 65 to 70 level, could actually be used as a buying opportunity. So, as you can see, we're looking strong, and we think we're going to stay there because the dollar is in the ascendancy. If the dollar can't get above that 100-day moving average and stumbles at the 200-day moving average, then that's when we get worried. But right now, the dollar is in the ascendancy, especially when it comes to some of these commodity currencies, which again, typically get hit very hard from expectations of tapering from the Federal Reserve. Now, let's take a look at the rand. That's interesting because I'm actually off to South Africa on Friday. So this is dollar rand. And I mean, you know, when you talk about tapering, your initial reaction is to think of dollar yen, but you also have to think of emerging market currencies and how bad that can be for them. And that's what we're seeing here. 1045, just ahead of that 1050 level, massive level of resistance. We are running into some, but overall, it's, you know, it's one way. We are looking a little overstretched though, so we could see a bit of a pullback. 1035 to 39 could act as fairly good support in the short term, and we think any weakness could be faded. I'll take one quick look at dollar yen, and then I'm going to have to go, guys. I'm terribly sorry. As you can see, still very, very strong, but on a short-term basis, looking a bit overbought there. We may pull back potentially to that 99.50 level ahead of making a stab at 100. So as you can see, we broke above that range there on Friday, or prior range that had lasted really since the beginning of October. The next level to watch is this one, 100.70, 60 to 70. We still think that's in view. We've spoken about it before. There's certainly the potential for further upside there. We do get Q3 GDP coming out of Japan later this week. Definitely worth watching. Black Cat, thank you so much for watching our YouTube videos. There will be another one up this week. And then, guys, I'm sorry I'm going to have to go. Now, on another note, I'm not going to be joining for another 3 weeks because I'm away in the aforementioned South Africa. So, and then I move office, so I don't want to risk doing the 3rd in case I can't make it. But back on the 10th of December, guys, put that in your diary. Thanks so much. Do watch our videos. Do check out our research page. And thank you so much for joining, as always. Really, really appropriate. Hopefully that was a nice small little chunk of FX news and ideas for you. So I do appreciate it. Thanks very much, FX Street as well. Okay, bye-bye.